Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. After taking a hit from rising interest rates, mortgage real estate investment trusts, or mREITs for short, like NexPoint Real Estate Finance Inc., traded on New York Stock Exchange under symbol NREF, have been rebounding since the Federal Reserve began cutting its key lending rate. While some may think that higher interest rates are good for mREITs, since they purchase or originate mortgage and mortgage-backed securities, which is great if you have a lot of floating rate investments. But higher interest rates can force potential home buyers to wait on the sidelines for a better borrowing environment. Lower rates, on the other hand, might mean less income from interest, but it could mean more lending. John?
Yeah, well, and after recording back-to-back strong quarters, NexPoint Real Estate Finance Inc. has seen its share price surge to near record levels. Over the last 6 months, for example, NREF stock has rallied an impressive 34%, at least of this recording. And from October 30th, the day before it announced its third quarter results, through December 3rd, which is just a little more than a month, NREF stock advanced 27%, hitting a 52-week high of $18.09 per share. And that's just slightly below its May 2022 record high of $18.37 per share.
And John, I can see that NREF stock has retreated a little since then to short-term profit taking, trading around $17.25 per share. But thanks to continued strong financial results, lower interest rates, and solid economy, the outlook for NREF stock remains robust.
Yeah, and just a little background, NexPoint Real Estate Finance is, as you probably already guessed, an mREIT that is primarily focused on investments in multifamily, single-family rental, or SFR, self-storage and hospitality sectors located predominantly in the top 50 metropolitan statistical areas. Yeah, the company focuses on lending or investing in properties that are stabilized or require limited deferred funding to support leasing or the ramping up of operations, for which most capital expenditures are for value-added improvements. The portfolio has minimal exposure to construction loans, no heavy transitional loans, and no for-sale loans. The company's outstanding total portfolio is comprised of 83 investments worth $1.1 billion. The portfolio is geographically diverse with a bias towards the southeast and southwest.
In words of management, NexPoint reported another strong quarter.
Yeah, NexPoint reported third quarter net income of $16.1 million or 75 cents per share. And that's higher than the 68 cents per share in the second quarter of 2024, and higher also than the 43 cents per share recorded in the third quarter of 2023. The company reported cash available for distribution of $15.8 million or 67 cents per share. Now that's up from 64 cents again per share in the previous quarter and 47 cents per share in the same prior year period. Now looking into the fourth quarter, NexPoint expects to report earnings available for distribution in the range of 75 cents to 85 cents per share, and cash available for distribution 45 cents per share to 55 cents per share. Now, for comparison's sake, in the fourth quarter of 2023, the company reported earnings available for distribution of 44 cents per share and cash available for distribution of 51 cents per share.
If you like what you see so far, check out incomeinvestors.com. While you're browsing the website, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, with all this, what does its dividend look like?
Cash available for distribution, or CAD, is the amount of cash a REIT has available for dividends. So it's important that a REIT have enough CAD to cover their payout. Now, in the third quarter, NexPoint announced a CAD of 67 cents per share. Now that's more than enough to cover its most recent quarterly dividend of 50 cents per share, or $2 per share on an annual basis, for a forward dividend yield of 11.6%. Now, when the company has a really good quarter, it can also distribute a special dividend. In October of 2023, for example, it declared a regular dividend of 50 cents per share and a special dividend of 18.5 cents per share.
John, thank you so much for your insights. NexPoint Real Estate Finance Inc. is a great mREIT with a geographically diverse portfolio, which has a weighted average remaining term of 3.9 years. This helps provide income investors with reliable and transparent earnings stream for the next 4 years. And as an mREIT, NexPoint doesn't follow the same strict lending rules and that traditional lenders do, which allows it to deploy capital even in this challenging credit market, creating long-term value for its shareholders. This helps it provide investors with reliable dividend and the occasional special dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.